Hey, it's Mike. I am not an investing guru. I'm an average guy sharing my investment journey on the internet. In today's video, we are going to discuss investing in TSLY, as well as the 6-month review, the distribution, and the performance that I have with this fund. One of the main pillars or foundations of this strategy, this income investing, this dividend strategy, is to use margin, a very small portion of margin, to produce income. And ideally that income, some of it gets reinvested, some of it is set aside for taxes, and the other percentage can either be used to pay bills, the other percentage could be used to buy other funds, or reinvest back into the fund itself. So the key is using a small percentage of margin. So I use about 5% of margin investing in this account. And another important factor is to have a solid distribution yield. I don't like to call these dividends because these aren't really dividends. I guess they are, but I think of them more as distributions because it's premium income. It's not necessarily excess earnings being paid out to investors. So you're investing in margin, and that return, that distribution has to be higher than the amount you're borrowing. So I use Robinhood. If we go to my buying power thing here, I'm at a low margin risk here, and my interest rate percent is 8%. So my annualized rate is 8%. So ideally, the investment that you have to invest in, the one that I have chosen, is called TSLY. It's a YieldMax fund. And that distribution is 64% per year, according to the last month's 30-day SEC yield. So if you're borrowing 8% and you're getting distributions of 64%, essentially you're getting 56% after everything. So this is an extra way to make income in your portfolio. Kind of thinking bigger picture here. So if this account is worth maybe $1 million or $2 million, if you're borrowing 5 or 10% of your fund and it's paying these type of yields right here, that is a good amount of income that you can use without having to sell all your assets. So just something to think about. I think that's like a very interesting point. So yeah, let's just quickly go over some of these metrics here. So I do have a low risk of being margin called. So we're gonna look at the details. So we have about $124,000 in buffer. So this is the key here where I mentioned that I'm only using 5% of my total portfolio. So because I have about $200,000 invested, 5% of 100,000 is 5,000. 5% of 200,000 is $10,000. So I'm only borrowing $10,000, and that is just to show that I'm only using that much money. My total margin use is $9,242.71. I was looking through some comments, and there was a fellow YouTuber who mentioned this strategy is too risky. I can't believe you are borrowing hundreds of thousands of dollars to do a strategy. That is not what I am saying, not at all. I'm only using about $9,200, and we'll look at how much money this is producing me here. Other thing here, I want to show you the margin maintenance here. So, a lot of people here either have used margin or have not used margin, but margin maintenance is a thing where if your portfolio gets under this value of money, you get initiated something called a margin call. And in that margin call, you would have to sell assets to cover the margin amount of money. This has happened to me before. I was able to clear it out. It was fine, but just something to keep in mind. So the reason, if this account goes to $85,000, there's a chance that I could get margin called because I am borrowing $10,000. But because I'm using such a small portion, the likelihood of that happening is very, very low. All right, so let's go through some TSLY numbers here. So all time, it's down 41%, which is terrible. Sometimes these covered call funds have a NAV erosion, and one of the ways you can combat this is reinvesting money back into it, which I can explain later when I go to my spreadsheet. But so total market value, $12,653.86. That is the total return. So I have reinvested back some of the distributions into this, which is also accounting for that. And then in this time frame that TSLY has been going down, Tesla slightly has been going down. So they do correlate with the actual holding. Margin requirements, so initial requirements 50%, but then the maintenance requirement is 25%. So what this is saying is, if I have $85,000 and I want to borrow $10,000, the initial requirement would cost me about $5,000, but then the maintenance requirement would really be $2,500. So instead of having a maintenance requirement of like $90,000, it would really be $87,500. Moving along, expense ratio, it is close to 1%, but there's a lot of people, there's a couple other YouTubers that mention, why don't you just do the covered call strategy yourself or run your own synthetic calls? I have ran synthetic calls myself, and to be honest, I'm an amateur when it comes to option investing, and the people that run this fund are professionals. I do great when the market has been going up, but then what happens when the share price of the holding goes down? I don't know how to roll down, or I would be too scared to lose some percentages. And they have all different types of formulas and mathematics that I just don't have my hands on. And to be honest, paying this 0.99% to get this 64% distribution, I'm more than okay paying with it. And then, when you're putting in the weekly, selling the covered calls every single week, you're watching the market all the time, because what happens if the stock drops 5 or 10%? This is Tesla. This isn't the S&P 500. It can drop up and down 5, 10, 15% at any given day. So, you're always going to be adjusting positions. I would rather just have a professional do it for me, and I'd rather just milk the income and not focus on it. Moving on. So last 24 hours, we got paid this TSLY dividend or distribution, $642.19 here. So if you look here, I have 1,063 shares. They paid 60 cents per share, which gave me $642.19. So going into the spreadsheet here, so I put in some numbers here. So these are the December 2023 numbers. So the total amount of money that I have use is $16,976.01. So this is counting the $10,000 of margin I used. I used a couple $1,000 of my own money, as well as there has been a decent amount of reinvestment of the distributions into this that is accounting for that. So if you look at that, we're still at a loss in the total value. So we're still down about $4,500. I do believe in the future that this fund will recover. Tesla share price will go up. The Fed just recently said that the economic performance, or the CPI, is kind of cooling, so that there's a possibility that interest rates may go down, which technically will help Tesla, because the majority of what Tesla does is they sell expensive items, cars, solar panels, huge batteries, and those usually require loans. And if people can't get access to loans because borrowing money is too expensive, technically the business does take a hit. So that's kind of a positive sign that there could be some capital appreciation, as well as the if the share price is going up, then the covered call income will go up, because the implied volatility goes up. So if you look at the margin amount, so 95.24, which comes out to about 56% of the amount invested in this fund is margin. Okay. Gross income, $642.19, which, for $16,000 is an insane amount of money to have. Like $642, like that is, you could do a lot of things with that money. And then, just going through the spreadsheet here, I have accounted for some expenses. These expenses are accounting for the margin borrowing, which comes out to about like $54. And then the Robinhood Gold, which is $5 a month. So about $61.64 is where we're at for expenses. And then taxes. So usually what I do to calculate taxes, I take this number, subtract this number, multiply it by 0.3, and that gives me my tax number. In the past, when I did get margin called in the past, I made a decent amount of money selling covered calls, like thousands of dollars, but I wasn't setting aside taxes when I was making that money. And then when the following tax year came up, I owed $20,000 or $30,000, and I had to pick up a bunch of overtime to pay that off, but that was fine. So we're being smart this time. We are setting aside the money for taxes. So for 2023, we're setting aside $750 for taxes, because that's the total amount of taxes that we set aside. And if you look here, that is the amount that I have set aside in this account, just so that we don't get burned again. And as the income grows, there's going to be more money in that tax fund. And then, when the tax time comes and all this money isn't used to pay taxes, I will just reinvest it back into like VTI or VXUS. Moving down, so then reinvestment. So, if you look at the TSLY performance, all time is down 41%. So, we are definitely having a decent amount of NAV erosion. I bought around $15. So my cost base is $15.75, like, somewhere over here. So, I ran some mathematics here when it comes to reinvestment. So you can increase your portfolio value. So you can increase your portfolio value if you're having an 8% decline in dividend appreciation. So the amount that the dividend grows every year, if it's declining 8%, it's a 40% dividend yield, and the actual price of the holding goes down by 10%, you still can gain money. And actually, the more that the overall price goes down, the more money gets reinvested back in, which also gives you more income. So necessarily the share price going down isn't necessarily the worst thing in the world. And then, with a fund like this, you're really getting your gain from the actual distributions, not by the actual performance of this. So, if you're getting 64% a year, but it's down 40%, you're still up 20%. But again, that's just me arbitrarily saying something. Like, I haven't really delved into the numbers, and I just don't want to say that is end all be all, but that's just kind of what it is. But yeah, if you invest 25% of money back in, which I invested $160.55. So if you look at my history here, $160.55. So that is exactly what we did for reinvestment. And as time goes on, it's going to buy more shares, which then will hopefully Tesla's share price goes up, which then will also increase the premium payments. So with everything being set aside, so expenses, taxes, and reinvestment, this is the actual net gain we have here. So setting aside for taxes and reinvesting so that your money continues to grow, as well as that distribution increasing over time. So you have $245.83 to do absolutely whatever you want. So you can put this back into TSLY, which I wouldn't necessarily recommend. What I am starting to do now is, once I get that reinvestment, I actually want to put my money towards VTI and VXUS. So 75% of that money into VTI and then 25% in VXUS. When it comes to Tesla, I believe I have enough shares where if this does skyrocket, then we are good. I don't think I need to be adding more to that position. So I think I just want to VTI, VXUS, and chill. And then also too, when I do get any money from my paychecks from my W-2 job, I will go ahead and just put that money in there. So this money, again, I could use to reinvest, put into different holdings, spend it on myself. I just think spending it on yourself is not a good idea right now, especially, we're trying to create another form of income. And then, so the monthly yield here, so if you take this number, divide by this number, so we get 1.48%. So you can see here, we're getting about 1.2% per month, which is a pretty good return. So, if you're getting a 12% return a year, you get $1 million, $120,000, pretty good money. Okay. And then the final statistic here, I'm going to talk about is the portfolio boost. So you just take this number divided by your total portfolio value, and that by using the margin and setting the money aside for expenses, tax, reinvestment, using this money, you're getting a 0.12% portfolio boost. So, you do that for 12 months, you're pretty much getting about a 1.2% portfolio boost a year. So, if the S&P 500s are taking 10% and then you get 11.2%, that is, you're outperforming the market. So by borrowing the money, you're able to do that. And let's just talk about some of the metrics up here. So, we talked about, the income from value, how much we paid. Oh, we got to change that. 16,976.01. All right, great. And then we'll change that here in just a second. But the total income value, so I added up all these numbers, $2,844. Total expenses, so this is counting the margin interest. And then this, we had a higher expense month here because I did sell a put. I bought a put, which costed like $100 or something like that. So kind of skewed it a bit. But these are the expenses, the total taxes. And then again, after the total taxes money set aside and the reinvestment, we're about $1,000 in. So this is a 6-month review. Here are my overall thoughts on it. So, I wouldn't say throw all your money into this. I am solely doing this for more like scientific discovery and research just to see how a covered call fund like this works. I'm only using 5% of my overall portfolio, so that's a very low amount of risk. Even if you did do your own covered calls or any type of option investing, you should only limit that to about 5 or 10% of your portfolio. So that's kind of where I'm keeping it at. So I'm like about 4.5, 4.9%. Overall. So, that is a decent place to keep it. So, in terms of portfolio strategy, I'm in line with that. But yeah, I wouldn't be putting all my money 100% into this. I mean, if you were, you'd definitely be getting a good amount of money. But then the thing is that NAV erosion, I don't know exactly how that's going to work. I ran a basic calculation with the reinvestment, with having your portfolio increase over time as well as the distribution because you reinvest it back in. But there is calculations and then there's also real life. So we're doing the real life. We're not being an armchair warrior, trying to decide if this is something legit or not. We're testing it out. We're putting the information on the spreadsheet and we're seeing how this goes. So as of right now, I wouldn't say this is like a viable strategy necessarily moving forward, but this is just kind of like an interesting experiment for me to share with you guys on possibility of creating a stream of income by using margin. So, ideally the thought was, you'd borrow money to create this side stream of income while you wouldn't be touching or selling any of those shares. So that's kind of the idea here. So right now we're in the early stages of it. You're not going to see the fruits of your labor until, a couple years down the road. We're 6 months in. So, anyone saying that this is a pretty garbage strategy, it's too early to even say that though. Yeah. I'm down $4,500, but the market has been kind of like a weird purgatory right now. But if you are gauging in investments over 6 months, that's just not the right approach. So, we'll see how it goes, but the income is definitely there. So, it is pretty satisfying, waiting every single month to get that huge dividend check or distribution check. That's awesome. So definitely a plus there. There's some guys I follow on YouTube who are putting all their money in. Definitely wouldn't recommend doing that. The VTI, VXUS, international and US stock market and chill, I think is a good strategy. And that should be the bulk of your portfolio. I heavily invested in Tesla because I used to believe in concentrated portfolio theory, which is not necessarily something you look up, but if you look at Warren Buffett or Charlie Munger, they invested in concentrated positions. They would put their money in top 5 positions. They wouldn't be investing in 50 stocks. They invest in the top 5. And then I took that even further. It's well, why would I invest in top 5 if I can just invest in the best company? I believe Tesla is poised in a position to make money off of multi-$100 billion markets with between, electric cars, solar, battery storage, as well as the artificial intelligence that they're working on. That's going to be the biggest thing. So yeah, these are kind of some of my thoughts. We're sharing the performance. It's okay so far. Again, I'm not super impressed with what I'm seeing. But I'm just trying to do this right. If you guys have any recommendations to add to this dividend spreadsheet, I would love to hear it. But besides that, I hope you all have a great day and I hope you all can make money for your families, financially set yourselves up and free yourselves from the rat race. All right, y'all take care.